welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And this is the show, viewers, where you get answers for all your stock-related queries in a short while from now. We'll also connect with our experts and also focus on Adani Green Energy. But other than that, Cheryl, the markets are definitely matching your color of the dress and of the day's highest point.
Absolutely, and that is the only reason why it's matching what I'm wearing right now. Shashi, a very good morning to you. If you look at the markets, they've actually now dipped into the negative territory. Is the benchmark indices, I stand corrected, that's the one that is in the negative territory. You have Nifty Bank that is actually barely in that red zone as we speak, but they are trying to actually recover from the day's lowest point. Take a look at what the broader markets are doing, because broader markets, last time I checked, were outperforming the benchmark indices, and yes, still in the positive territory. That's the mid-cap index for you. Even the small-cap index, that's the one that's outperforming even the mid-cap index. 0.5% uptick coming in for small-cap index. Taking a look at the list of gainers today, you have NTPC that's rallying in trade today. Remember, this one was also an outperformer post its earnings, and now once again you can see 4% uptick coming in on the NTPC. Coal India is the other PSU company that's seeing gains of about 2.8%. Tech Mahindra, 1.9% uptick coming in for that one. Aisha Motors, Dr. Reddy's are the other counters that are in focus. But on the flip side is Power Grid that's reacting to its earnings, 5% downtick coming in for Power Grid. You have Apollo Hospitals that's still sulking in trade. Adani Ports, SBI Life, Adani Enterprises, other set of losers in trade. If you look at the advance decline ratio, as of now, it's still in the favors of the advances, initial hours of the trading session. But talking about the sectoral indices, there is a realty index that's been outperformer of late, but realty index is down about 1.8% as we speak. The top loser on the sectoral front, energy index, as well as banks are the ones that are out, declining in trade. But on the flip side, you have most of the sectoral indices in the positive territory, with the IT indexing 0.6% uptick. Also, you have metal, autos, and auto and oil and gas and pharma that are in the positive territories. That's the way how the markets are looking like at this point in time. Shrishti, yes, the benchmark indices are in the negative territory, but the broader markets are rallying.
Well, yes, absolutely. And today, Cheryl, a lot of auto counters will also be in focus on the back of the auto sales data. And looking at the data that we have till now, wherein Bajaj Auto as well as Escorts has come in. And for Bajaj Auto, we have seen that the sales were actually not as per the expectation. The company reported a sales data of 3.2 lakhs versus the street expectation of 3.4 lakhs. And that's why we are seeing sort of a muted action in stock like Bajaj Auto. But M&M sales have actually a bit of a disappointment. The sales expectations were not that great. We were expecting 7,000 units to be sold in the month of July, but the company has clocked in even lower than that. And even the management commentary, they keep saying it on a month-on-month basis that the sales could catch up in the times ahead, but we are not seeing at least that happening in the short term.
Absolutely, that's about the auto space. But my colleague Ajay Sharma is standing by with an interesting conversation with the management of Adani Energy Solutions. Ajay, over to you.
That's correct. Adani Energy Solutions is in focus after the results, and we have Mr. Anil Sardana, MD of the company, to talk more about the company the quarter gone by, the roadmap, and also new name which the company has adopted now. Mr. Sardana, good morning. Thank you very much for joining us on the show today. We saw that, at a console level, your numbers look pretty impressive. But at the same time, the profit from transmission segment was slightly on the softer side. What are the reasons behind that, and was this a one-off? Do you see this mean reverting in the coming quarters?
So good morning, and thank you for having me over. Yes, you're right. While the consolidated profit is higher compared to the previous quarter of the last year, the transmission segment had one-off 65 crores that had to be paid as dividend tax that we got from our subsidiary in Mumbai. So interestingly, in the consolidated, the revenue doesn't come, but the tax is still something that we have to account for. Those are methods that have been prescribed for accountancy, and therefore you see that 65 crore outgo. Otherwise, the profitability even at Adani Transmission in the transmission standalone business was good.
We have noticed that the company has a new name now, Adani Energy Solutions. Talk to us about the thought process. All the approvals have been received about this name change, and how did you decide the name Adani energy solution in the first place? What exactly does it reflect about the future?
Right. So the company that was formed in January 2015, called Adani Transmission Limited, started its business in transmission, and as you know, today is the largest private sector transmission company in the country. However, over the last few years, the business has outgrown just transmission. It's now moved into retail distribution. Subsequently, we have picked up large orders on smart metering. And the wingspan actually started to move far and wide in terms of offering different solutions to customers. There's a tremendous focus in terms of providing solutions to such of the customers which today don't see competition in the retail last mile connectivity. So we, with our experience in Mumbai, where we have parallel licenses, have now applied for second distribution license in different geographies. In fact, 3 to be precise already, which are pending with the regulators at some stages. And therefore, considering the fact that we are no more just in transmission business, we thought that it is important that the name must reflect our activity. And we have therefore named it as Adani Energy Solutions Limited. And as the name suggests, we will offer all kind of solutions, but more so for customers to source green power, for customers to look at reliability in terms of the fact that we will offer them competitive tariffs with reliability onus upon ourselves. If tomorrow their DG sets have to be run, we will run at our cost. So we'll provide them 24/7, almost all our distributors, almost like a distributor of choice. So therefore, energy solutions are there for beneficiaries to now look forward from this house.
Mr. Adana, for Adani Energy Solutions, what kind of opportunity set do you see in transmission tendering pipeline segment of your business? And is it because there is a huge growth or transformation which is likely to happen in the next coming years in the renewable side? How would that add to your growth?
Indeed, what you said is right. The government of the day has committed that they will move to 500 gigawatt of non-fossil power by 2030. From the current power, which is close to about 110 gigawatt, that's a huge capacity addition. Now, in India, we have adapted models by virtue of which solar farms as well as wind parks are all going to be either at the coastal locations or in the areas which are arid, where the lands can't be used by the habitat. So from those areas, the bulk electrons will need to be brought to consumptive areas. And therefore, the transmission, as will grow in the days ahead, is going to be humongous. In fact, it's a big opportunity set. And this company is positioned very well in terms of expanding in that area. So transmission pipeline, as you are already aware, we're sitting with almost 20,000 crore of orders in hand, which we have to execute over a period of next 2 to 3 years. And in addition, we find that there'll be 75,000 crore of pipeline that is just for us to participate in terms of bidding in the next few perhaps quarters. So therefore, a big set of opportunities in the transmission area.
So Dana, the other thing which the government is also aiming towards is plugging the T&D side of the losses in the power sector. And smart metering opportunity, we've seen some announcements happen in the past as well to some of your other peers. But what is your own tally looking like in terms of smart meter wins, and how big or meaningful can this opportunity be in your overall strategy for energy solutions?
So as we talked while talking about the name change, one of the key areas is to locate and ultimately work in those areas where we eventually have our eyes set for us to take over the distribution in due course of time once it opens up. And to that cause, smart metering gives us a very good foothold to get into some of those areas by understanding the entire paradigm of customer base, understanding that market. We have already in the last few months got 3 orders for close to about 46 lakhs meters, which is 4.6 million meters, and close to about 5,800 crores of rupees worth of orders. Now, this is just the beginning, and we are going to be one of the largest players. I've mentioned that before, that Government of India has plans to put something like 250 million meters amongst various players, and we are targeting 15 to 20% of that market. So it's a huge market. It gives us good foothold in areas to understand the customer data, understand those areas well. By virtue of putting smart meters, not only that we get familiarized with those locations, but we actually get familiarized with the entire geography and the network management. Therefore, it puts us in the pole position for us to expand eventually and acquire the wires in those areas.
Mr. Sardana, talking of expansion, also talk to us about what kind of capex have you lined up. We understand you've also applied for parallel licenses in several geographies. Which are those geographies? If you could talk about slightly elaborate expansion and capex plan put together.
Right. So Adani Energy Solutions will do a capex of something like 7,000 crores plus minus 500 crores each year. And that will include right now the majority of transmission businesses, and of course the network expansion and the capex that we will do at Mumbai distribution and at the distribution in the Mundra area. In addition to that, we will do rollout of smart meters. And of course, on this second license that you mentioned, this is an area that I want to elaborate, as you rightly suggested. We have applied for licenses in 3 areas. One is to expand our Mundra operations to the entire Kutch, Saurashtra area. So that is the second license in that area that we have applied for. That's pending with the Gujarat regulatory authorities. The second license that we have applied for is for Navi Mumbai area, which of course, as you know, is a contiguous geography to Mumbai area where we operate for past several years. And that again is something that we are expecting the regulators in the Maharashtra Regulatory Commission to deal with. And the third license that we have applied for is in the Western UP area, which covers the entire area from Ghaziabad all the way to Jewar, Bulandshahr side. And that's with the UP Regulatory Commission that is there. And I want to make one additional point here. Many of the listeners and consumers must bear in mind that by way of second licensee, you are actually getting nothing on the platter. You are supposed to lay down your network, and you have to be competitive compared to the existing distributor, because the existing tariff becomes the ceiling tariff. And therefore, whenever you get to hear that the existing regulators and existing discoms are panicking because somebody has applied for second license, that clearly shows that they are not up to their performance. Because you're going to get nothing from them except that you will go back to the customer and say, I'm going to be more competitive than the incumbent. And therefore, to us, this should be opened up. This should rather be promoted by regulators and the governments of the day, because it offers customer that choice as it exists in Mumbai. And one has seen that in cities, in areas which are semi-urban, like we have shown in Delhi, we have shown in Mumbai, the private players are able to offer much better and nimble services. And in this case, the yardstick is the incumbent's tariff. And therefore, unless the new player is more competitive than the incumbent, you don't get business. So therefore, this should be promoted by the movement of customers. This should be promoted by the governments of the day. This should be promoted by the regulators. I thought I'll use your medium to communicate this to the larger audience.
Anna, just one last word on some of the initiatives which your company may have taken in the area of ESG. I understand that the group is very committed and continuously making progress on that glide path on the ESG front. Talk to us, what's the latest happening there?
Very well said. In fact, the ESG commitment of the entire Adani group stays much ahead of the other corporates that we see in our area of business. Let me talk about Adani Energy Solutions. We have aspiration to take this company to within the top 10 to 15 global corporates. So, and when I say this, I'm talking in terms of this to be valued and accredited by international and global brands. I'm very happy to tell all your listeners that FTSE, which is one of the large accreditation agency, has recently given a score in 2023, which actually puts us within the top 10 global companies in our utility business. The commitment with regard to environment, commitment with regard to the social paradigms, the commitment with regard to different aspects of governance at the board level, as also with regard to transparency, has to be reflected and put in the public domain. Because many of these agencies don't come back and ask us questions that we will have time to address and respond. We have to put the data in public domain. That means through our website, through our annual reports, and based on that, they do the evaluation. So on the ESG front, in all these three areas, with respective environmental aspects, respective social touch with the community at large, respective commitments to the various norms of governance, in all fronts, the team is completely committed to set new benchmarks. And we are very happy that different recognitions are coming thick and fast. During the last quarter, we got the ET Company Award as one of the emerging companies. And there have been several other similar international awards with regard to aspects which are key frameworks towards ESG. So it's important to mention that we will be one of the benchmarks, not only in global context, but be a torchbearer for various companies in India.
And we wish you all the luck and best wishes for those initiatives. Mr. Dana, thank you very much for chatting with us on the results and road ahead and other important initiatives which shareholders need to know about, which you've spoken to us today. Thank you very much for your time. Guys, with that, it's back to you in the studios.
For that, Ajay, definitely an interesting conversation with the management for Adani Energy Solution, erstwhile known as Adani Transmission. The company spoke about why the change in the name, for which they said that the company has now outgrown from the transmission business. They are providing all kind of energy solution, and not just that, spoke about the order book in hand, how they aim to become the largest player in the smart metering, and also spoke about the capex plan. That was the interesting conversation with Adani Energy Solutions management. But on that note, we'll actually take a break on this edition of Buy Now, Sell Now. When we come back, we will start taking your queries. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can write to us on the WhatsApp number that will just come up on your screen. Do remember to mention your name, the stock that you're looking to invest in. If you're already invested in the stock, then mention the buy price as well as the quantity in that way, and also your time horizon. In that way, our experts will be able to help you better. And talking about our experts, today we have Kunal Bothra as well as Rajesh Agarwal joining us on the show. Very good morning to you, Kunal, as well as Rajesh. Thank you so much for joining us on ET Now. And first query coming your way actually, Rajesh, and this one is coming from Subramani. He's writing to us from Chennai, and he wants your take whether Granules India and Galaxy Surfactants are a good buy at current price. If not, suggest any other company that he can look to invest based on fundamentals.
Good morning, Sharu. Good morning, Srishti. Good morning, Kunal. Both the counters are good, no doubt on that. The fundamentals are strong, but I think they have underperformed quite a lot in the recent past, and there are no triggers as such at this point of time. Maybe Granules would be a better bet out of the two, but I would say go for Century Textile. The fundamentals look very strong. The company is into three divisions: textiles, real estate, and paper. Paper expansion has been done. And in real estate, they are going in a big way, acquiring lands in Bangalore, Bombay, etc. So I think this company can give very good returns in the next 6 to 9 months. So one can go long on Century Textiles and Granules.
Okay, moving on to the next query then, and Kunal, this query is from Pratiksha from Muscat, and he has an exposure in metal names such as Tata Steel as well as Hindustan Copper, sitting at a profits of 20 to 25% in both of these. So just wanted to know that, is this a right time to book profits, or should he stay invested for long term?
Yeah, I think short term, these should ideally be considered as short term bets, because metal counters, they are prone to a lot of news flow. The volatility for them is also pretty much high, and these stocks have a tendency of going in through phases of very sharp uptrend and then a very sharp correction, which could come back into the stock prices. I'm not sure whether the correction would come back immediately, but then if you're sitting in profits of 20% plus for both of these stocks, it's an ideal opportunity for you to try and book out profits. If not book full profits, then book at least 50 to 60% profits, at least into these kind of names, and trail your stop losses much higher. Maybe a 5% stop loss, trailing stop loss from current levels. That would be a good strategy.
All right, this next query that I have is coming in from RK, and he wishes to sell at 10% loss. That is M&M Finance. He's suffering a 10% loss in this particular counter. He wants to know if should he look to exit this one and look to buy Page or All Cargo. I think logistics is what he's asking for a period of 2 years. Kunal, what's your take on this one?
Well, I think we should ideally stay put for M&M Finance. Now, I understand that the stock in last 1 month from a top of 350 approximately has corrected towards 290. But then the stock has come back towards an oversold indicator on the daily charts, as well as a very strong support at the 280 levels, which means there could be a correction of another 9-10 rupees for M&M Finance. It may come back towards that 280 odd mark, but that could be actually a very strong support zone for the stock price. So ideally, I would suggest that you wait out for the stock price at current levels, wait out for a reasonable bounce. Even if the bounce takes the stock higher to 305, 310, that could be a much better level to exit the stock rather than current levels.
All right, I stand corrected. It was not All Cargo. In fact, it was Ashok Leyland. So your view doesn't change, Kunal?
No.
Okay, fine.
Okay, moving on to the next query then, and Rajesh, this query is from Pradeep from Kolkata, and he has bought 20 shares of KEI Industries from a price of 1250 rupees. That's the first counter, and he is also holding 10 shares of Kajaria Ceramics from a price of 1174 rupees. So at this point in time, what to do in both of these names, since he's sitting at a good profits in KEI and a decent one in Kajaria Ceramics? Should he stay invested with a long-term investment horizon?
See, I would say if time is not a constraint and you're not in a hurry to gather some funds, I think one should stay put with both of them. With the kind of movement and traction we are witnessing in real estate sector as a whole, and both these companies cater to that sector, I think KEI in the wire and Kajaria in ceramic both are, if not the market leader, then at least they have good presence in both of them. And one should continue holding to that and buy for any chance Kajaria falls to 1250, 1280 odd levels. It would be a good buy zone for.
This one is coming from Meghana, and she bought today itself Ashok Leyland at a price of around 185 rupees per share. About 200 shares of Ashok Leyland is what she's purchased. She wants to know targets that you have for the month of August.
Well, in fact, I would believe that the stock is actually facing a lot of resistance at this 185 odd mark. If you remember, I think last week or so, the stock tried to retest at levels of 185, could not surpass those levels on closing basis. We saw correction coming towards 177, 78 for Ashok Leyland. I would actually expect something similar going forward. In fact, most of these auto stocks, they are actually going into a bit of a resistance zone where they're unable to scale past their previous resistances. So I think it's better that you try and buy these stocks on correction rather than at the point of expecting a breakout, because many a times when these stocks face a lot of resistance at a certain price level, that's where these stocks are unable to surpass those zones, and then they tend to correct. So I would believe that it's better that you exit Ashok Leyland and look to buy back maybe closer to 177.
Okay, moving on, and Rajesh, the next query is from Venkat Jala, and he's actually been holding shares of Clean Sciences, but after a long time he's at a break-even point. So at this point in time, should he move out of Clean Sciences and make a switch to Gland Pharma, since pharma is in flavor? So what will be your advice?
See, getting out of clean sciences, it's advice because I think it's not that good a company. You have been stuck for a very long time and now it's in a break-even level. Get out of that. Gland Pharma, yes, they're injectable. They're into injectables, a very big company. The numbers have been pretty bad in the last 2-3 quarters, and that's the reason the stocks saw such a massive correction, almost more than 50%, if I'm not wrong. So this is the time I think Gland Pharma would give good returns. Maybe a 1,500, 1,600 odd targets in the next 2 quarters is quite possible. So one can switch from Clean Science to Gland.
Another one coming your way, Rajesh, and this one is from a fan of yours, Ghosh Zada, writing to us from Delhi, saying over the last 15 years he's been watching you on various channels and he respects your views quite a bit. So he wants to know about the Adani group of companies. One is Adani Ports, Adani Enterprises, as well as Wilmar, huge quantity, and he's in great profit in these counters. Now he wants to know about 2 other counters from Adani Pack, which he's not holding. That is Adani Green Energy and Adani Energy, erstwhile known as Adani Transmission. What's your view on these 2?
Thank you, Ghosh Dada, for your kind words. In the entire pack, I think these 3 companies stand out, which you are already holding: Adani Wilmar, Adani Enterprise, and Adani Ports. As far as transmission is concerned, we just heard the management their view plans of expansion of 700 odd crores every year, going for big into smart meters and all. I think that's a company one should have a look at for a longer term horizon.
Those are the view on Adani Group of shares. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. Welcome back to Buy Now, Sell Now, a show where we get you answers for all your stock-related queries. And to answer and guide you better, today we have Kunal Bothra as well as Rajesh Agrawal onto the show. And Kunal, coming to you for the next query. This one is from Ramamurthy from Bahrain. And firstly, he wants to thank you for your guidance on NCC, BEL, Dixon Technologies, etc. And now he wants to know that is this a good time to enter into Laurus Labs?
Thank you so much for that. I would believe yes. I think Laurus Labs could actually be a good contra bet at current levels. Now, I remember I think in entire 2022 and the first 2-3 months of 2023, I was extremely bearish on the stock price. But then now, the price data, the volume data seems to be indicating a major change, which could actually be coming by into the stock price. At least the selling pressure which the stock was facing over the last 1.5 odd years, that has abated for Laurus Labs, and there is some sort of a delivery-based buying which has come back into the stock price. So the tide seems to have started to change for Laurus Lab, and I would believe that that could be a good contra bet. But the only point is that you'll have to have a medium to long-term time frame over here, because if the stock gradually gets into a a recovery phase, you could see the first phase where for the first 6 to 12 months, the stock may give returns of 15 to 20%, and then the pace would accelerate as in how the time goes by. So I would believe that have a medium-term time frame if you're looking to buy Laurus Labs.
Okay, this next one is coming your way. Rajesh, Sangeeta Gowda from Bangalore has written to us and she wants to know about 2 stocks. One is 141 shares of Samil, which she has at a price of 100 rupees per share, average price of 100 rupees per share. The other stock that she has is SAIL, 94 shares at a price of about 97 rupees per share. Wants to know how do these counters look over the longer term? Stay put with these one or switch to something else altogether?
See, Samudran Motherson is a very good stock in auto ancillary that has seen a tough time in the recent past, but going forward when auto numbers are started moving up, and even Class 8 trucks numbers have been not that good, but still better than what it was. So I think there are good times ahead. Maybe a 120 target in the next 1 year, 18 months is quite possible. As far as sale is concerned, it's also a good company, but I would suggest going for Jindal Steel and Power in the metal space to be on a safer side.
Those are the recommendations that you can look forward to. But Kunal, coming to you for the next query. This one is from Jay Krishnan from Kerala and wants to, and he would like to actually buy ABB and Siemens India at this point in time. So wants to know any level where he can enter these names.
Well, I would suggest to wait out for both of these stocks. Now, Siemens, if I'm not wrong, I think in the month of May, the stock had fallen from 3,900 to 3,300 on the back of some news flow. That got corrected and the stock has come back towards 3,900 mark. So which means that the stock would try and get into this 500, 600 point range for the next 3 to 6 months. So I think a better range to buy Siemens would be closer to 3,500 or 3,300. So you can start buying from 3,500 and then every 100 point drop towards 3,300 mark is where you can look to average. For ABB on the other hand, again a similar price range, 4,200 could actually be a better bet. We may start buying ABB at current, not at current levels. I would believe that wait out for correction for both of these stocks if you're looking to chip in even from a long-term play.
All right, this next one is coming in from Sagar, a bit longish query, and this one is for you, Rajesh. He wants your view on Bharat Bijli. He's saying, and he's noting that it's a small cap company, but he's holding a nice chunk of this counter, sub 1,000 rupees level. He's saying the stock has been performing pretty well for itself. As you can see on your screen, the stock is now around 3,700 rupees per share. He wants to know if you think that the cap goods will continue to trend for a couple of years. And do you think that the valuations are expensive, as almost all capex stocks have gone more than 3 to 4 times in the last 2 years? So what's your take on this one? Do you think that the cap goods trend will continue going ahead? And in that matter of fact, should he stay put with Bharat Bijli?
See, first half of the question is for cap goods stock as a whole. And that I would say is going to be there for the next couple of years because a huge capex has been announced not only by the private sector, but also by government sector like railways and all. So these capex announced by those corporates are going to help capex stocks give good returns in the near future. Secondly, coming to Bharat Bijli, the numbers have been good. The company is on a strong footing, and we should not forget that this company holds a big chunk of Siemens with in their investment. So that again gives a good valuation because Siemens we have seen giving a good run up in the stock prices, and finally it has also moved up. So yes, one can go long on Bharat Bijli at this point of time also, and since you are holding from a very long period of time, I think one should continue holding to that.
Okay, so that's the advice on Bharat Bijli. But Kunal, coming to you next for Ashoka Buildcon. This query is from a viewer. I didn't get his name. Okay, he's Apala Raju from Bangalore and he's invested in Ashoka Buildcon 550 shares from a price of 106. He wants a medium to long term view on this particular counter. He also got your advice just 1 month back and he's been invested in this particular name for and holding this one. So going ahead, what are the targets that he should be looking at?
See, I think 105, 106 is very close to the current market price for the stock. I would suggest that you wait out for maybe another 3-4% move for the stock and let it come back closer to your cost price. That could actually be a good territory. We may look to book profits or exit the stock because my sense is that in this leg of uptrend for Ashoka Buildcon and specifically from the June lows 75, 77, the stock has seen two phases of rally, one from 77 to 1992 and the other from sub 90 levels to 100 plus where it's trading. But the volumes in both of those price legs for Ashoka Buildcon have been less as compared to what we ideally look out for, which means that the stock would probably try and plateau out at 105, 110 mark. So I think it's better that closer to your cost price, you can look to exit the stock and look to buy back in case if it falls back to 90 or sub 90 levels.
All right, this next one I have is from Padma Siva Rao. He's writing to us from Bangalore, and Kunal, actually he was checking out on Hind Copper whether he should exit some of his holdings, but he's already gone ahead and exited by the time he could come to his query. So he's saying he sold Hind Copper right now. He wants to know now which one can he buy next?
Tough one. I would believe if you're looking to buy something at current levels, then you can look out for something like Tata Power. I think that's a stock which had not performed in last 6 odd months. I think at 240, if I'm not wrong, where the stock is trading right now. looks good for another 20 rupees on the upside. So 260, 258 could broadly be the short-term target for Tata Power.
Okay, so those are the short-term targets coming in for Tata Power. But with this, viewers, it's once again time to slip into a short break. But don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get you answers for all of your stock-related queries. Let me continue taking your queries then. And this one is coming in from Sai Kumar. He's writing to us from Pune. And he's purchased SP Apparels at a price of around 392 rupees per share. About 72 shares of SP Apparels is what he purchased. He wants to know whether this is a stock that he should be holding for the longer term, Rajesh. And what's the outlook that you have for the textile space?
Textile as a whole is going to do well because of cotton prices going down, which were the major problem in the last 12 to 18 months, I would say. But SPRLs is not that kind of stock where you think about a long term. Maybe in a short term, it can move up because of the kind of correction the entire textile pack has seen. It will move up to 520, 525 odd levels. But for a longer term horizon, better quality names are there. Maybe Arvind Denim or a Vardhaman Textiles would be a better bet in that sector.
Okay, moving on, and Kunal, coming to you for the next query, that is on Divi's Laboratories. The pharma is definitely in flavor, and Govardhan from Bangalore has bought shares of Divi's Lab from a price of 4,500 rupees. What we are seeing is that in the past 1 month, it's sort of a muted up move for Divi's Lab, but now should the viewer expect a good up move?
Well, you can expect a good up move, but I think that should play out possibly in the next 3 to 4 quarters for Divi's Lab gradually. My sense is that maybe one leg of correction is still pending for the stock over the very near term, and that's why you're seeing the stock underperforming most of the other pharma names at a point when the pharma index had hit an all-time high, and most of the large caps and mid cap pharma stocks have come back to their life highs or 52-week highs or multi-year highs as the case may be. So I believe that Divi's Lab can go into a mild correction. So assuming if it comes back to 3,350, 3,400 levels, that could actually be a good point where you may look to average out so that you can reduce your initial cost price.
All right, this next one is coming in from Vivek and Kunal. We did have Rajesh talk about the cap goods sector, how he believes that the uptrend will continue for the space going ahead. But we have Vivek who's actually telling you that he started unwinding in the cap goods sector from 2 to 3 years time. Which other sector is expected to do well, and if you could also suggest stocks that he can look.
So if you're looking at a 2 to 3 year time frame, then I think it's always best to buy the underperforming sectors, and there are 2 sectors which have actually underperformed in this leg. And of course, the first one is the IT stocks, and we all know what's buzzing around the IT names. But then I think from a longer term perspective, 2 to 3 year perspective, this may actually be a good time to try and accumulate many of these large cap IT names. Even the other sector, like the cement sector, for example, that sector is also underperformed. The likes of Shree Cement, Ultratech Cement, these stocks are nowhere close to their previous major swing highs. So I think these are the 2 sectors which you can keep an eye on if you're looking at a contra bias and with a time frame of 2 to 3 years.
Okay, moving on, and Kunal, the next query is on Tata Motors. This query is from Shankar, and he wants to congratulate you first on your recommendation. He bought Tata Motors, and he's now holding 11 shares at a price of 405. So at this point in time, should he average out furthermore and add more for a long-term investment horizon?
Well, I would just suggest to stay put for Tata Motors as of now, not to average out at current levels, because as I was mentioning earlier for, I think, one more query on Ashok Leyland, for example, that many of these auto stocks, they've hit some sort of a pause for themselves. Now, it could be a routine time-wise correction, or it may eventually turn out to be a price-wise correction for many of these auto names. So it's always best to try and wait out for that phase to pan out. As of now, I would believe that Tata Motors from a long-term play looks attractive, but from a short-term wise may not be the best time where you can look to buy or average. So just hold with your existing quantity as of now.
Okay, another one coming your way, Kunal, and this one is from Balan. He's purchased NTPC at a price of 195 rupees per share. He also has Hero Motor at the price of 3,120 rupees per share. For the short term is what he has both of these counters. Now he wants to know whether he should go ahead and book profits in NTPC as well as Hero Motor Corp. Do you think that it's a good strategy?
Well, for NTPC, yes, I think it's a good time to book out profits. Most of the indicators have entered into overbought on my charts, so I would probably expect the stock to get into a immediate correction, say over the next couple of days. Hero MotoCorp, on the other hand, I think is something which you can hold, because I believe that the stock has still been a big underperformer as compared to two-wheelers and most of the other auto stocks. So there should be a significant upside for Hero MotoCorp even from current levels. So that's a strategy which you can adopt.
Okay, but with this, viewers, it's time to kickstart the rapid fire session and taking all your queries in this special segment. And Rajesh, the first query is on from Bishakha from Kolkata, holding 50 shares of Godavari Power Ispat from a price of 290 rupees. What to do next with a 2 years investment horizon?
If your funds allow, you can add to that. It's a good stock.
Okay, this one is coming in from Gautam. He's writing to us from Mumbai. He 50,000 shares of GMR, which is now airports. He's bought at 16 rupees per share. He's asking, is there a scope for revival in this particular counter? And also, what sort of a target should he have for the next 1 to 2 years? Rajesh?
One can hold on to the stock with a target of 55 rupees.
Okay, Kunal, Philip wants to know what to do in Apollo Hospitals, holding 7 shares from a price of 4,425 rupees. Is that a hold or exit with 6 to 12 months investment horizon?
Hold.
Okay, this one is from Dr. Subaya. He wants to know about PNC Infra as well as Polyplex, but I'll take Polyplex instead. 30 shares of price of 1,710 rupees per share. Is it advisable to hold, Kunal?
Yeah, you can just continue to hold on.
Rajesh, what's your outlook on Federal Bank? Professor Thomas V. George has bought 5,000 shares from a price of 95 rupees. What to do next?
The numbers were very good. Continue to hold.
All right, this one is coming from Anand N from Gurgaon. Thank you, Kunal, is what he's saying for your call on REC, which he purchased about 600 shares, price of 169 rupees per share. Can he buy some more of this counter over the medium term? How are the charts looking?
Good time to actually book out profits.
Rajesh, Tata Chemicals has been bought by Nagesh. He's holding 200 shares from a price of 1,042 rupees. What to do next? Is that a sell or hold?
It's a strong company. After a long time, it started moving up from the last 2-3 days. One can continue to hold, target well ended.
Kunal, I'm unsure you tracked this one, but Rajani wants to know about Paisa Digital. 65 rupees per share is the buy price. What to do?
Continue to hold on.
Okay, Rajesh, Reena Thomas from Kerala has bought 200 shares of NTPC from a price of 186 rupees. At what price to exit? Any views on that?
See, if you don't need funds right now, continue to hold at least 275 in the next 1 year.
All right, and with that, we come to the end of the rapid fire as well as the query segment. Thank you so much, Rajesh, as well as Kunal, for joining us on the show. And surprisingly, today we do not have any queries on ITC for our guests. But on that note, we will wind it down on this edition of Buy Now Sell Now. Goodbye from Shristi, myself. Team put the show together. Stay tuned. Markets at Noon coming up next.